Good afternoon, everybody. Welcome to this webinar, How to Improve Your Credit Score. I'm Sarah Steele, the owner of Better With Money, and we provide financial education in the workplace to help people to understand their finances so that they're going to be inspired to take action and reduce money stress. Now, today we're providing this free webinar to support Talk Money Week, and that is aiming to reduce the stigma around money by encouraging conversations between families, friends and communities. Now we're known as a nation to keep a stiff upper lip when it comes to money, and I saw a post yesterday, I don't know if any of you saw it on LinkedIn, it said that we keep 21 million secrets across the UK about money, and over 50% of those are people that are hiding credit cards and loans that we've taken out. And sadly, the negative impact of COVID-19 on many people's finances has increased our reliance on this type of credit. Now, if we can overcome our inability to talk about money, it can really have a huge impact on managing our finances, which is really important for our overall health and relationships. So this webinar is just one of a series of financial education webinars that we provide for employees to improve financial well-being. Our sessions cover a whole range of subjects from budgeting, savings, debt, home buying, and so on. And if you want more information about that, you can go onto our website at betterwithmoney.com. But just a few notes before I start. Firstly, there's lots of you lovely people out there. I can still see that people are joining at the moment. So you are in listen-only mode. So very sadly for me, because there's lots of people out there that I know and love, I can't see or hear you today. But that doesn't mean that you can't ask questions. In fact, the more the better. So if you've got a question that you want to ask, you can ask it at any time through the webinar. You should see in your little webinar box a questions pane. At the top right hand corner of that, you've got a square with an arrow in it. If you just pop on that, that will pop out your questions box. And just like in sort of Zoom and Teams, you've got that chat functionality, you can write questions in there. So I'm just going to check that this is working and that there are lots of you out there as the system's telling me. So if you could just put hello, just so that I can see that you know how to type the questions, and I'll be keeping an eye on those. Tell me where you're dialing in from. Oh, hello. Hello, Ellie. Hello, Lee. Lots of people. Hi, Toby. Lovely to see you. John. Wow, they're all flooding in. That's really brilliant. Thank you. So that's how you do it all the way through. Hello from Suffolk. Hello, Helen. Thank you very much for joining. Anna, sorry if I haven't said your name. That's fantastic. Right, let's move on then. So just a little disclaimer before we start. This webinar is providing information only. It isn't financial advice. It's education to really get you thinking about what you can do to improve your money situation. Now, Better With Money, we're not connected to any other organisation, so we don't receive commission or payments. So if I do mention companies along the way, it's because we genuinely believe that they're offering good services that you can take advantage of. Right, so let's look at what we're going to cover today. So you might ask, why did I pick this particular subject? Well, I can honestly say, out of all of the financial topics that we host webinars about, the webinars I do on credit scores always seem to generate the most interest, the most questions. And I just thought, with the increase in reliance on credit cards and overdrafts for many people at the moment, our credit score is actually becoming all the more important. Now, according to Experian, around 90% of adults in the UK don't check their credit score regularly. And half of us have never checked our score. We don't know what it is. And that can cause a real problem, because our credit score affects many areas of our life, from getting mortgages, finance on cars, and even affects our insurance rates, as we'll go on to talk about. So knowing our credit score is an important step in improving our finances and reducing that money stress. So for the next 20 minutes or so, I'm going to be covering the benefits of having a good credit score, what's actually shown on our credit file, and just as importantly, what's not shown. Then the best way to find out what our score is and what that means, and then the sorts of things that we can do that might affect our score and push it up, and what we can do if our score's maybe not quite as good as we want it to be. And then we'll finish off with some questions at the end. Okay, I'll be keeping an eye on the questions. They're coming on the screen here, so feel free, and then I'll catch them up at the end of every section. Right, so firstly then, let's expand on why we need a good credit score. Now, there are often times in our lives when we need to borrow money. Now, whether that's to apply for a mortgage because you want to buy a house, or because you need a new edition phone, or you want a new edition phone or car, but you don't have the money to buy it. So you need the finance to spread the cost. You know, or like me, you know, I was thinking back, if I go back 25 years, I just graduated, just got my first job in London. I needed to buy work clothes and a train ticket, but I had no money. I was a poor student. So I had to get a credit card to buy those things, to tide me over till the end of the month until I got paid. So most of us at some time or another need credit to help us manage our finances. You know, and the important thing here is that credit isn't necessarily a bad thing. As long as we choose the type of credit well, we use it carefully and wisely, and then we're paying those repayments at the end of each month. Then we can use it to our advantage. Now, when we apply for credit, we sign an application form, and that is giving the lender permission to check the information that's held on our credit reference file. Now, this information is collected by the credit reference agencies about our financial history, which is our borrowing and financial behaviour for the last 6 years. Now, this information allows the lender to assess whether they think we're a responsible borrower and whether they're going to lend the money to us. Now, in the UK, there are 3 credit reference agencies that collect our information and keep it and hand it out to the lenders, and they are Experian, Equifax and TransUnion. Now, you might know TransUnion as Call Credit because that was their old name. Now, if the information shows that we are a responsible borrower, then this can have quite a few benefits. So firstly, if it's looking good, we're going to have a much better chance of being accepted for that credit card or loan. And then that good track record also means that we're likely to qualify for the best rates. So we'll be paying lower finance charges on our credit balances. And as you're well aware, the less money we pay in interest, the faster we pay off the debt, and the more money we're going to have for other expenses. Now, when it comes to 0% credit deals, we're likely to get a much longer 0% period if we're seen to be creditworthy, and we're also going to be approved for those higher credit limits too. It's also worth mentioning, though, that more and more landlords are now looking at credit history as part of their tenant screening process. So the better your credit history, the easier it's going to get approved for rent. A bad credit history, especially if you've had a previous eviction or an outstanding rental balance, can actually severely damage your chances of getting rented accommodation in future. It's also interesting to know that insurance companies also use your credit history now to develop your insurance risk score. So with a really good risk score, you're typically going to be paying less for insurance than if you've got a very similar person sitting next to you that has got that lower credit score. And I thought, really importantly, it's worth noting that many employers now are doing credit checks as part of their application process. Now, law and finance companies have to do it, but there's other sectors that are following suit. They do it mainly to confirm your identity, but they also check your creditworthiness with money, particularly if that's going to be a key requirement of the position that you're going to do. You know, if what they see suggests that actually you might not be suitable for the role, you could be turned down for the job, and as a consequence, you know, your bad credit history could actually be holding you back in your career. Obviously, employers do need permission to check, and they're only going to be checking at doing what's called a soft check. So that means although they have initial look at your credit reports, the fact that they've looked won't actually be visible to other companies. So with a soft search, only you can see that on your report, and it doesn't matter how many of those soft credit searches they are. Now, the ones that we're worried about are those hard credit searches. These are the ones that are visible on your report to other companies, and these are the searches that are done by lenders when you make a credit application. So loads of benefits there of having that good credit score. Now, the other thing that I don't think is very well known is that the credit reference agencies don't actually provide a score as such to the lenders when they hand over your information. There's no financial blacklist either, which is going to stop you from getting credit. All that happens is every time a lender requests that information about you, they're giving the details for the last 6 years up until the current time about your financial history. They then take that information, the lenders, and they make a decision based on that. In practice, a lot of them put all of that data into a computer program. It generates their own score based on their own criteria, which basically says, yes, we'll lend to this person, or no, we won't, or yes, we will, but actually we won't give them the best rates. So that's why it's really, really important. Right, so let's see what is actually shown. What's the information that the credit reference agencies hold about you? Firstly, you've got the electoral roll information. So this shows addresses where you've been registered to vote and the dates that you were registered there. And to lenders, this electoral roll really helps them to prove the address on your credit application. They're also going to hold public records about you. Things like financial court judgments and bankruptcies, if you've got these, because these are likely to negatively impact your ability to get credit for up to the next 6 years. Then, as you'd expect, they'll look at information about your existing bank accounts, your credit cards, your loans and your finance. And what they're looking for is how long you've held those accounts, the amount of credit you're using, and really importantly, whether you've made those repayments on time. If you've ever had a home repossessed, they're going to have that information too. Then they'll be interested in anybody that you're financially connected to. Now, there's actually only 4 products that can financially link you to somebody else. And these are a joint mortgage, a joint loan, a joint bank account, and actually utility bills, as utility providers are now sharing that information with credit references too. Therefore, if you've got a partner that's got a poor financial history, keeping your finances separate can actually avoid their history affecting your credit score. Now, some of you might be sitting there and thinking, she didn't mention joint credit card, and that's right, because although they're called a joint credit card, actually those cards are only in one person's name with a card that someone else can use. So actually the person that takes out the card is the person who's responsible for paying it back. So actually it's just a single credit card with somebody else who can use a card on your behalf. The credit reference agencies are also going to hold details of companies and organisations who have searched your information in the last 12 months, those hard credit searches, because this gives them an indication of how much credit you've applied for and how reliant you are on that credit to live. And lastly, it is worth noting that since 2015, child support agencies have also shared this information with the agencies, particularly where an individual's got a liability order made against them. That's the measure that's used as a last resort to encourage payment after all the other avenues have been exhausted. Now, someone's just said joint. Do they join you with someone where you declare it, or do they deduce it from the other information? So yes, Philip, I think you're probably talking about utility bills there. So on joint utility bills, they have to be certain that you're married and that you're living at the same address. So if you have utility bills to Mr. and Mrs. Smith, then they are allowed to deduce that actually you are financially linked. If it was to Sarah Steele and Joe Bloggs, then they wouldn't necessarily join you financially because they can't prove that your finances are together. But it is worth, if you feel like you've been financially linked to somebody and you shouldn't be, you can actually write to the credit reference agencies and ask them to de-link you, but we'll go on to that in a minute. So there's loads of information there that the credit references hold about you, and they pass on to the lenders when you make a credit application. Right, someone else has just sent in, hi Sarah, I recall a few years back, just after moving to the UK, I was rejected for a phone contract because my credit check was negative. However, 3 was unable to comment explain as this process was outsourced. Experian was unwilling to comment as well. Wow. Now, let me come on to that one, because I think one of the reasons for that, I think the key there is you said that you just moved to the UK. Maybe you didn't have address information held for long enough for them to prove your identity. And one of the things you can do, even if you're not eligible to vote in the UK and therefore you can't get on the electoral roll, is you can send your utility bills to the reference agencies to prove your address, and they can hold that on there, which might then help that process. But there'll be a little bit more coming on as to what you can do about that. But that's a brilliant comment. Thank you very much for that, Matt. Right, moving on, because I think just as important is to know what's not on your credit file. And there's a whole host of things here as well. So there is no personal information, nothing like ethnicity, medical history, salary, and it's a myth that if you check your credit file, it counts against you, because only you can see that. Experian actually did a survey that showed that about 17% of people were afraid to check their score because they feared it would have a negative impact, and that's just not the case. So if there's one thing to take away from today, that's definitely it. With regards to council tax arrears, this is a criminal matter, not a civil matter, and therefore all criminal matters are not actually shown on your credit report. So even if that debt is referred to court, and this will be dealt with by a magistrate's court, and all the fines will be imposed by a magistrate's court, and that includes parking and driving, so they do not appear on your credit report, and that's a well-known myth as well. It's actually the way that the lenders find out about this stuff is the applications that they ask you to fill out alongside getting your credit reference checks. And often you'll find that, you know, if you even try to lie on that, that is fraud, and you could be severely penalised for doing that. So just be careful. But I think it's really interesting to see what's not on there as well as what is on there. Someone else says, I've registered for voting a long time ago, but it's still not showing. If it's still not showing, Anna, by all means, get hold of the credit reference agencies. Normally they update their records about every 30 days. So they should certainly have that information if you did it longer than 30 days ago. If it's not shown on there, contact them directly and ask them to put it on. And that's known as a notice of correction. Okay, so importantly then, this is all very well. We know that we need to know our credit score. It's really important. It can impact loads of things, but how do we check it? Well, there's quite a few companies out there who allow you to register online to view a summary of your credit files. Now, I've put 5 up here, but there are others too. If you do a website search, you'll see loads coming up there, but these are the most popular. So you've got Experian, Equifax, Check My File, Credit Karma, which used to be called Nodle, in case you still know it as that, and ClearScore. Now, each of these companies obtain your credit files to then generate an indicative credit score for you, just like the lenders do when they're trying to assess your creditworthiness. So they're trying to replicate that process to give you a really good idea of how you're viewed. Each service uses a slightly different scoring range, depending on the credit reference agency that they get their information from. But you'll be able to find on the app, once you've registered, exactly what that score means, and whether your score is excellent, good, fair, or needs improving. And you'll see here that I've actually put the scoring range for each service in the bottom of the boxes, and at the point that you're deemed to be an excellent borrower. Now, as you can see from the list, Experian, Credit Karma and ClearScore, they all offer a free service, which will give you the main information that you need to know and will certainly give you your credit score. And you also, one of the questions I often get is which credit references use the most? And at the moment, most of the lenders do use Experian, although I think more and more now they're starting to take the information held by all of the credit reference agencies. Now, if you decide to go for the Experian free app, you will see a score based on the information held about you, but not a lot else. If you then decide to pay the $14.99 per month for their Credit Expert product, you will then start to get things like personalised tips on how to improve your score, a prediction of how it might go up over time, and things like that if you decide to follow those tips. You'll also get a report that's updated daily to show the lenders that have done a check on you, and to see whether you've missed any payments. Personally, I use Credit Karma. It was one that I sort of jumped on a few years ago, but I like it. They've got a free app and it gives you all of the information for free, including all of those tips and who's done searches about you. Now, they pull their information from TransUnion rather than Experian, but I find just as a regular check, I probably go in sort of once or twice a month. I find it perfectly user-friendly, for not having to pay any fee. But I thought I'd also mention Check My File as well. This service charges $14.99 a month, and the reason it justifies that is it pulls information from all of the credit reference agencies, not just one of them, and it also uses Crediva as well. Now, Crediva is a UK company that provides all of the agencies with a risk assessment of your creditworthiness that doesn't just rely on your previous credit account history. And that can be particularly useful for those people who haven't had a lot of credit before and haven't managed to build up their score. Now, most of the paid apps provide a 14-day or 30-day free trial period. So, you could always take a look at all of them, but just remember to cancel the ones that have got those paid subscriptions if you don't want to continue them. But one of the really important things about these apps, which I love, is that you can switch on notifications, and that will then tell you every time something about your credit report changes. Not only is that a good way of seeing your score, but it's also a really good check for you to make sure that nothing fraudulent is happening with your finances behind the scenes. And actually, more fraud is detected through people checking their credit score than any other route. Any advice on Credit Club from Money Saving Expert? Yes, so as far as I understand it, I'm amazed I've got this far through without mentioning Martin Lewis. He does an amazing job. But I think if you join the Credit Club with Money Saving Expert, basically what you're doing is you are then getting that paid service from Experian. He's linked in with the Experian paid service. So you'll get all of those, all the tips and all the rest of it. So it's a good service. But make sure that you don't have to pay for it, because there are other services out there that are going to be giving you all those tips for free. Right, moving on. So let's assume then that you've registered for one of the free services, you've entered your details, it's generated your score, and it's told you whether you're excellent, good, fair, or poor, or very poor. What does that mean in practice? Well, if you're one of the 23% in the UK with an excellent score, that means that you are likely to get the best deals and the lowest insurance rates. Then, as you'd expect, as you start to fall down that scale, it becomes harder to get credit. And if you've got a poor score, you might still be accepted for some cards and loans, but you're not going to be getting very good rates, as you're going to be seen as a bad credit risk. And if you're one of the 5% of people in the UK that's in that very poor category, you're going to be struggling to get any credit at all. According to Experian, just to sort of give you an idea of what it means financially, if you can improve your score from poor to fair, you could save nearly £100 a year on a 4-year loan of £6,000 because you're going to be paying a lower interest rate. So it's really worth following the tips to get yourself up into that fair, and if not, that good range. Okay. Somebody's just asked, do you have to use your credit card often to keep up your score? What if you don't use it? So Sandra, yeah, I mean, there's no bones about it. At the moment, in order to build a credit score, you need to be using credit and paying it off regularly. Now, some of the companies don't necessarily give you the best score if you're paying it off in total every month, because of course for them, they quite like the people that are not paying it off in full every month, because it means that they earn more money. But generally speaking, in order to get a credit score, you do need to be using credit and paying it off regularly. Someone says, if I pay off my statement balance in full each month, does it improve my credit score? On the whole, yes, because we're going to be coming on in a second as what affects your credit score. So let me do that, and then I'll come back to some of these questions that are coming through, because they're really, really interesting. Okay, so if your credit score needs improving, you want to get into that good category, what can you do? So what is it that's affecting your score the most? So the first thing, let's look at that big pink cheese there, is pay your bills on time. Any missed payments are going to count against you for a minimum of a year, and they're going to stay on your file for a full 6 years. If you miss just one payment, it could be the difference between getting credit approved or not, as that payment history can actually account for up to 35% of your total credit score. So things like setting up direct debits to pay your credit cards and loans is definitely the easiest way to make sure that you're paying it on time. If you can't pay the full amount, even paying £1 over the minimum can be better for your credit score than just paying the minimum alone. Next thing to do is to look at how much credit you're using. That's that green wedge there. If you've got too high a credit limit or too many credit cards, lenders might be concerned that if you get credit with them as well, then you can run up loads of additional debt if you used it all with those other credit cards. So it's usually best to cancel any unused cards that you've got. However, there are two points to note here. Firstly, if you've missed a payment on a credit card, don't close that card too soon afterwards, because then you're never going to have the chance to get the financial history on that card back on track. And future lenders will just see that card as a problem, and it will impact your credit score. The other thing, and I think this comes to your point, Ellie, you will get a better credit score if you use less than 25% of all the credit available to you. So when you cancel credit cards, obviously the total amount of credit available to you comes down. And if you've got any outstanding balances, the outstanding balances as a percentage of your overall credit is going to go up, isn't it? You know, so actually that could push your credit score down as well. So there's two reasons there why you need to think about cancelling cards before you do it. But on the whole, if you're not used them, if you've always paid them in full, you don't think you're going to need them in future, then cancel them, because you're more likely to get approved for credit in future. Now, 15% of your credit score is based on credit history length. So generally, the longer you've had your bank account and your credit cards, the higher your score is going to be. So although we're given lots of advice to switch accounts, get the freebies, get the deals, it doesn't necessarily help you when it comes to your credit score. I mean, I've just got the one bank account that I started when I was 11, and I just keep that going. Doesn't matter how often I use it, I keep it going because it is sitting there on my credit score as having had a bank account for years and years and years. We won't say how many. Okay, and then people with the top credit scores often have a good credit mix. So that's lots of different types of credit accounts. So somebody that's got a mortgage, a credit card and car finance, because that shows that you can manage a wide range of credit products. And then the last thing to think about is how much new credit you're applying for. Don't apply for too many credit facilities over a short space of time, because that could impact your score. It could go down by about 10%. So in summary, most importantly, pay your cards on time. Try not to use more than 25% of your overall credit score, your overall credit available, and don't take on too much credit in a short space of time if you want that score to go up. So I'm just looking through, I think I've answered quite a few of the questions coming in. Does overpaying your mortgage each month have a positive impact? Well, Paul, they'll just be looking to see that you're paying on time and that you don't have any defaults. I think if you were looking to remortgage in future, that's when they look at your bank account and what's been going out, because they can go through the open banking system, or they can ask you to provide your bank statements. At that stage, it will make you more creditworthy, but it won't necessarily be impacting on your score if you're paying off your mortgage in full anyway. Is it worth applying for a credit card to boost a score before considering a mortgage? Absolutely, yes. If you haven't got a credit card and you know that you're going to be applying for a mortgage in future, then that is definitely worth doing. I mean, I've got two girls, so I'm just looking at the time. We'll get to the end very shortly, but hopefully you can all hold on. I've got two girls at university, and as soon as they got offered credit cards, much to their surprise, I said, take them and use them. Put your Aldi food shop on every month. They only put about £40 on, but they put that £40 and then they pay it off in full every month, because they now know that they're starting to build that credit score. So if you've got the ability to do that, then yeah, that's a great idea. Right, let's just go on to how you can rebuild your score if it's poor. Firstly, find out which credit reference agency they use to make their decision. You've then got the right to see that file for free. They have to give that to you. Look through that. If you think any of the information on there is wrong, you can write to them and ask for it to be changed, and that's the notice of correction. So things like, if you know you're on the electoral roll and that's not showing, get that done. My husband's got a bank account that he's had since he was 11. It's not showing. He can get that updated as well. And one of the other things is make sure you've got the right address on all of your things. Even if it's a really old credit card you don't use anymore, but it's got an old address on it, update it to your most current address to make sure that you don't have any ID check issues. Another thing to do, double check you're on the electoral roll. As I said, if you can't go on the electoral roll because you're not a UK national, you can also send them that proof of address. Now, one of the things that's just come to the UK is Experian Boost. It's a new service, and they were trialling it in the US first. As long as you have opened one of the free accounts with Experian, you can authorise them to connect you to your current bank account. And then instead of looking for credit stuff, they will look at things like, do you pay your council tax on time? Do you pay Netflix or Spotify on time? Things like that. If they find some positive information, they'll boost your score, and it could make a difference by up to 66 points. And that is particularly helpful, again, for those people who haven't had a lot of credit facilities such as that mortgage or credit card. You know, and as we said to Anna, if you can get a credit card to start building your history, that's great. If you've been rejected on a number of occasions, don't keep applying, because every time you apply for credit, it's going to show on your credit report. So leave it a period of time, and then the next time, probably 6 months, and then before you try and do it again, use an eligibility checker. You're going to find these on things like, either the credit score apps will have those, but places like Money Saving Expert as well. Put yourself into that eligibility checker. It will do a soft search, which won't show on your credit score, and then that will tell you which cards you are most likely to be approved for. So just to bring this to an end today, and I'll see if there's any more questions in a second. We've had loads of tips, and I realise it's been a bit of a whistle-stop tour in a short space of time. So once this webinar's done, I will send through this final slide as a PDF. Go through it, see how many of them you can cross, because the more you can cross, the better your credit score is going to become. You know, and the best thing is, once you've registered for one of those free credit score apps, it takes just 30 seconds out of your day just to check it, make sure nothing weird's going on. And that small money habit can make a really big financial difference. Right, I've included some of the really useful websites that I've mentioned today. So let's see, have we got some more questions? Can you use more than one credit score company? Absolutely, you can use as many credit score companies as you want to. And as we saw, if you use Check My File, they pull in all of the information from all the 3 different credit reference agencies. Any views on renting being included to help your credit score? I think what you might mean by that, Lee, is if you pay your rent on time. So again, if you wanted something like your rent and paying that on time to help boost your score, Experian Boost might be one of the things that you look into. Someone says, has the session been recorded? Yes, it has. I'm not sending it out automatically, but if you'd like it, just drop me an email afterwards and we'll get that out to you. Thank you. It has hit 1 o'clock. I've had lots of lovely questions. If I haven't answered it, I will go back through them after the session and I'll reply to you personally. As we say goodbye today, there's going to be a short survey that pops up. I'd really appreciate it. It's only going to take 1 minute of your time just to fill that in. But just to say, enjoy the rest of Talk Money Week. Hopefully you can access lots of the other free webinars and seminars that are going on. And I hope to see you at one of our webinars again soon. So thanks very much for joining, and take care. Bye.